Hello everyone, my name is Yuhan Wu and today I will talk about the Telstra Corporation Limited. Now let's turn to the background. Telstra is the leading technology and telecommunication company in Australia, competing in the market of telecommunication offering a variety of communication services to its customers. Within Australia, the company offers 3.8 million retail fixed bundles and data services, 18.8 million retail mobile services, and 960,000 retail fixed voice services. As of now, the company aims at providing the best experience and deliver the best technology possible in communication. The company is listed on the Australia Stock Exchange with the ticker symbol of TSL and is a part of S&P ASX 20, which means that a company is among the 20 largest ASX listed stocks. With such achievement, the company has been present internationally in over 20 countries. Building a connected future for the surviving of everyone, the company aims at simplifying and easily usable services for the customer as it is the fastest and the largest mobile network in Australia. Now let's turn to the position of the company in the industry and the competitive advantage. In comparison to the industry, Telstra is the leading and the business of the telecommunication services as it has the largest and the fastest network, which is the most reliant competitive advantage of the company. The dominant position in the market, expansion focused strategy, improvement in the technologies, wide range of offerings, and strategic differentiation makes the company lead ahead of others. Ahead of this, strong competitive forces, improved portion of the peer has impacted the business leading to the low profit margin and less average revenue per customer. The major competitors of the company include NTT Communications, BY, Code Technology Services, Vodafone, GTT, Lumen, and Tata Communications. Overall, the strategic drivers in the recent past were evolution like the growth in data by a massive shift to the internet and the capacity to access that data in real time in the cloud. Machine learning and computing power. Ahead of this, the Australia Competition and Consumer Commission expect that the competitors of the company will take the market share in the regional areas after the rollout of the national broadband network. As of now, the company still remains the most dominating company in the industry. Now let's talk the economic and market events. Still after being the leading organization in the industry, the company has been heavily impacted by COVID-19 pandemic. The company announced the free local and national calls through its 15,000 payphones to help people in crisis. On the other hand, the company has been fined $50 million for communicating unconsensual conduct to indigenous customers, which involved the sale unaffordable mobile contracts to the customers. Also, the company is fined a $1.5 million penalty for delay in transfer the members of customers. They involved taking the opportunity away from the customers to keep their numbers the same when they change the providers. Along of this, there are many such indicated rising fingers on the ethic and the legal conduct of the company. The other factors that would affect the company include the decline of the role of the Telstra as a network operator as more NBN connections are used, which would have a negative impact on the revenue of the company. This negative impact on the revenue would be limited by the increasing demand for wireless communication generally and in the areas where the NBN performance is poor. The macroeconomic factors risking the company are the risk of increase in credit spread and credit risk exposure, and the risk of the decline in the different currency because of its business implosion across the border as little fluctuations in the exchange. Exchange rate can have a significant impact on the company results. Now let's turn to the company's performance. The performance of company has been much better than expected for the years 2020 to 2021. Even after the survival hit of the COVID-19 pandemic, the company reported a total income of $23.1 billion, EBITDA of $7.6 billion, and net profit after tax of $1.9 billion. The net profit of the company has been better as compared to last year's profit of $1.8 billion. Total dividends for the FY 2021 was 16% fully franked per share. Also, the company reported a decline in the fixed cost by a total of $2.3 billion since FY 2016. With such result in the tough economy, the company is expected to further lead the industry through its innovations. In the future, the company is expected to grow at full potential and growth. The total income of the company is expected to be between $21.6 billion to $23.6 billion in FY 2022. The company's capital expenditure is expected to be around $3 billion with free cash flow of around $3.5 billion. The board committee is also confident of meeting the forecasted result for FY 23. The company has been valued using the FCFF model using central assumptions. The net income is forecasted using the growth rate of 2.09% from the last 2 years. The non-cash expense or depreciation is taken as the average of the past 3 years. Net working capital is taken as the average of the last 2 years. After tax interest expense is forecasted using the growth rate of 70% of last 2 years as the company is progressively reducing the debt. CapEx is taken as the average of the last 2 years. As the company is overcoming the pandemic and rough macroeconomic factors, the FCFF is expected to grow at a long-term GDP growth rate of 2.38%. After deducting the debt and adding the cash to the NPV of FCFF, the value of the company to shareholders come out to be 49,088.74 million, and with the share outstanding of 11,1818 million. The intrinsic value of the share of the company result is being $4.13 13 cents. Now let's turn to the conclusion. The current market price of the company is $3.90, whereas the intrinsic value of the company is $4.13. Therefore, the share is undervalued and is a potential investment option. The company also holds the largest market share in Australia and further has a growth capacity. Overall, it is highly recommended to buy and hold the share for better returns. That's all. Thank you.